I've been trading gold profitably for the last 3 years, and today I am going to show you my super simple strategy that I basically use to generate results just like these, and these. Now, it doesn't matter whether you're trading with $100. Well, this strategy works perfectly. This is what we shall cover. So we shall need to understand the right sessions on when to trade. Then we shall also need to understand fundamentals. And then next up, we shall understand the structural strategy on how to approach gold, and then key levels, entries, and more importantly, correlation, understanding how gold affects other pairs. And then one last thing, well, we shall also take some live trades together here and see how it actually looks. And by the way, if you are watching me for the very first time, well, I'm Daniel and most people call me V-Dollar. I've been trading for the last 5 years and I've made over $2 million trading. But more than that, I have helped thousands of traders just like you to become profitable. And without any further ado, let's get into our strategy breakdown. Now, the very first thing to understand about gold is it's super volatile, and that presents two things, the good side and the bad side. Well, you stand to make a ton of money even in a single trade, but then on the other side you have a lot at risk. So that's a very important concept to understand. The next step is the trading sessions. Now, this is very important. You can't approach gold just like how you trade other pairs of GBPSD and all that. No, you need to understand the trading sessions. Now, as for me, I would recommend trading gold during the London and the New York session. That's when we have the best moves. Now, I'm not against trading during the Asian session, but one thing that I do guarantee you is you won't get good trades. So don't even do that. So stick to the London and the New York session. You can easily convert that into your time session so you have a better understanding. Now, next up is understanding the fundamental side of gold. Now, gold is not pairs like GBPSD and all that. No, it's an asset, and that's something to really understand. You see, whenever there is, let me say, war or anything, and there's too much insecurity and all that, people try to move their money from physical, let's say dollars and so on, and try to invest it into gold. So you need to understand that whenever we have, I'll actually give an example. We recently had the Iranian war and all that, and the price of gold at some point went up. Why? Because investors were basically moving their money from physical dollars and all that to avoid inflation straight into gold. So that's a good time for you to buy. And that's the fundamental side of things. Now, having understood that, let's now go into the structural side of things. Now, there's one thing that I often recommend. If you're trading gold, just go with a single bias, because there's something that you'll notice. You'll actually see that if gold is buying, then it's going to buy aggressively. And that means if you come in with sales and all that, well, you are cooked. So I always look at it in a single bias. If we are buying, then I'm going to look out for buys because it's bullish, all right? And then on the other side, if it's bearish, well, it's going to go bearish for some good time and you could potentially make a lot of money. Well, for my trading style, this is how I do approach it. The very first and most important thing is, again, as I mentioned, understanding the structural bias. Are we bullish or bearish? Remember, when you're trading, you are also trading with institutions, okay? You have big traders. Again, as we mentioned, we have investors. Are they selling off? Well, if they're selling off, you need to watch out for that. Are they buying? And if so, well, you need to watch out for that. How do you find that? Other than the fundamentals, well, you have the technical side of things. So now let's just go over and understand what's going on here. So I'll give an example right over here. If you look on the H4, okay, on the H4 time frame, you can actually tell gold has been bearish, okay? It's been selling off crazily. What should this communicate to you? Well, it's quite simple. You need to understand that, well, we do have sellers taking control, and we should also ideally try to find sales, okay? So number one, you have the structural bias, okay? So we have now a downtrend. Again, as I mentioned, you can always start from the H4, or sometimes you could go as far as the daily. Actually, on the daily, you can also tell that we did see gold hit our highest point over here. See that? So actually, at some point, gold did hit $5,600 per ounce, and at the moment, where is it? Well, we can actually tell at the moment it's at $4,330 per ounce. So it's been bearish for the last a couple of months, okay, since Feb. Anyway, as I mentioned, you could either do the daily, but I personally prefer the H4. So let's go back to H4 and then find out, okay? So now we do have the structural bias to the downside, and then the next thing that you want to identify are your key levels. Now, different traders approach it differently. Some other person could mark out the demand and supply levels. Some other person could go ahead and mark out a resistance and all that, and it's all fine. Ideally, what you want to find in here is your structural key levels. And for my case, well, same approach. So I'll just go over and mark out my swing highs and lows. A swing high is a level, okay? It's the highest level that the price did hit before dropping, and vice versa, just like for the swing low, okay? So in such a scenario, again, do that on a bigger time frame, so on the H4, and you could just go over and identify those. So you could have this being a swing high at the moment. Let me just mark that out. We have that, and then we could also mark out this wick over here, all right, as our swing low, okay? Now, what does this mean? Well, at this point, I want to look at the price action within this structure. Now, there's one thing that I want you to understand. I love keeping things simple, and I think trading is about simplicity, and that's what I exactly teach right inside my private mentorship, okay? Now, if you'd want to be part of the exclusive one-on-one mentorship where you get to learn directly from me, well, just go over, click the very first link in the description, fill out the form to your best format as much as possible, and then one of my team members will reach out for a consultation call to actually see if you do qualify. You see, this is for traders that are looking at scaling aggressively, tired of inconsistencies and all that, and you're ready to lock in. Well, this is for you. You can also go ahead and open up a trading account with the second link. I've been using the same broker for the last 4 years, so it's a good tech. And then lastly, make sure that you are part of the Telegram group. And without any further ado, let's dive back into it. So now we do have our swing highs, and as I mentioned, we now just want to look at the market structure right within this zone. Now, do you see how important this is? Well, it means now we are taking out all the fluff right from this other side, and now we are more focused on what the price is doing at the moment. Now, I want you to pay some attention and see what's happening in here. Well, the price is bearish, and that means we now need to go ahead and identify trading opportunities. Now, let's just go over and keep rolling. So we could now go over and mark out some of our key levels. Again, as I mentioned, you could identify those as your support, rather as your demand and supply levels, and any key levels. Right in here, I do see a trend line. Now, I'm not sure if you guys do know what trend line is about, but ideally in here, this is a value trend line because we do see some reactions. We quite tell that the price got here, reacted off, and then we do have some reaction at the moment, okay? Now, you can also take it to another level by drawing other key levels. They could be your swing highs, but now in the inner structure, all right? So at this moment, we can actually quite tell that the price has been dropping, but whenever it dropped, it got here, it got to this level, and then reacted off, and then it dropped up to this level here. See that? We have that, okay? And then we also have another level right over here. And then at the moment, we currently have this level over here. Now, what do you see? Well, it's quite simple, and this is how the market often moves. Actually, this is how the market moves. Ideally, you'll often see momentum phases, call that distribution, and then you get to see pullbacks, distribution, pullbacks, and then just like that. So in other words, whenever you see a momentum phase, well, do not panic, okay? Oh, the market is leaving me, I think I need to jump. No, all right? What you need to understand is whenever you have a momentum phase, sooner or later, you'll have a pullback, and that's the same idea right over here. So you can actually see now the price did drop aggressively, okay? When you look at these candlesticks over here, we do see some aggressive bearish momentum in here. What's coming up next? Well, think about that. Well, it's quite simple. Well, the price is now pulling back up. Now, in here you can use other systems as fair value gaps, looking at levels where the price did skip, so it has to fill the gap and all that. And that's a concept that I want to apply in here. Now, we could identify this gap over here, all right? And now what we are looking for is we could look at the price getting over here and then dropping back down, okay? ideally. Super simple, all right? So we have what our structure is, we have our key levels, okay? And now we are going to start scaling down. Now, having identified all our necessary key levels, I'll just go ahead and mark these levels here. So we shall say there's a key level, all right? Just label this, and there you go. And then there's also one other thing that we need to understand, all right? So we mentioned, okay, whenever we have a momentum phase, the next thing is a pullback. So in no case should you panic to place a trade because you think, oh, I'm being left behind. Oh, no, don't do that, okay? Don't do that, all right? Now, let's just go over and start scaling down to smaller time frames. I'm going to call this the top to down analysis. So it's a whole concept on its own, but it applies to almost every trading strategy, okay? Now, we get down. Whenever you scale down to smaller time frames, you kind of have a bigger picture, right? You want to see what the price is doing on smaller time frames. Think about it. When you're looking at the market on the daily time frame, each candlestick takes 24 hours to form. So that's so much data for you to process. But now if you scale down to M5, the M15, the M1, you kind of see what's actually happening in real time. And that's quite important. Now we can actually quite tell that the price is already doing a pullback. So I would easily directly scroll straight to the M15 to now just mark out my key levels and now see. So ideally in here, all right, best option, one thing that I want you to understand is the price would look at doing this pullback to fill the gap and then later drop, okay? Now, there is a fundamental rule, trade with a trend and all that, but sometimes you do get presented with an opportunity and you have to take it. Now, as a beginner trader, I won't recommend this. I can't tell you to take such a trade because it's against the trend. No, it doesn't work that way. But you can also watch this. So ideally in here now, from what we can actually see, all right, we can quite tell that, oh, I think we do see something over here. Let me just mark this out. Wow, it doesn't look proper. Let me just show you something. So ideally, what you can quite tell is the price did react out of that zone, came over here, pull back, just a bit of a push, and there we go. So now we are looking at that. So I often go to the M5 just for my extra confirmations. And at this point, it's actually valid for us to take a trade. Why? Because the price is not in a momentum phase, it's already in a pullback and then looking at pushing back up. So right over here, I'll just go over and place my buys, all right, targeting a 1 to 2, there we go, somewhere around here, and then I could have my SL, all right, somewhere slightly down over here, just as simple as that, and then let the trade do its thing. Now, there's one thing that I often do before placing a trade. I would always recommend that you cross-check, okay, get back and see how did you identify your trade. And there's one important thing that you also need to understand, and we call that correlation, okay? You need to look at how is gold moving, because look, gold has a close to a similar move with silver. So sometimes you could go ahead and compare and see, well, I found buys here. Is it also buys on silver? Well, if it's the opposite, you are cooked and you need to watch out for that. So that's an extra confirmation that you can always use whenever you're taking your trades on gold, all right? So ideally, the best trading strategy to trade gold is understanding the structure bias, okay? Are we bullish or bearish? That's the very first thing. Number 2 is identifying some of the institutional levels. Is it your demand or your supply levels and all that? Now, that can always be done on bigger time frames. And right after that, scale down to smaller time frames to find any necessary levels. Is it your fair value gaps and all that? And wait for the price to either fill that so you're able to take your trades. It's quite simple and it's super simplified. There is nothing as rocket science, okay? And I do hope you guys did learn and enjoy this video. If you did, well, go over and hit the like button and smash that subscribe button. The big goal is 1 million subs. And look, with you, it's totally and very possible. And as always, keep it less talk and more action, but then more importantly, motion must be first. You can also watch the next video over here to lock in. I'll see you in the next one. Let's go.